Alright, welcome back to the channel. We're going to be going over the SP500, the Nasdaq 100, and exactly what is happening on the stock market. Now, if you do not know, going into this whole week, we expected a dump basically Monday, Tuesday, and Wednesday, and then we expected bulls to take control going into Thursday and Friday. Now, Thursday was good. Beginning of Friday was good. But what happened and how was I proven wrong? Two words, Jackson Hole. Now, Jackson Hole was basically where Powell comes off for 10 minutes and just takes a crap on the market. Well, kind of. So listen up, because I'm gonna explain exactly what happened. It's time to clock in. Now what we're gonna do is go to the daily chart, and then we're gonna work our way down and show you exactly what happened on the day and then what to expect going into next week. But it's very important we attack what happened right now. Now what we're gonna do is just go in here to the daily time frame. Now what happened? So basically Monday, Tuesday, Wednesday, we were sitting in this range right here. You came right to our support. We were fine. This is what we expected. We expected basically from Friday and Sunday. I was telling everyone, I expect some movement down into Wednesday, basically Thursday, which was GDP. And then today was PC on Friday. So I expected that downside. And then we held up really well. At that point, I started grabbing calls and playing towards the upside, which we got that upside movement. Now, it wasn't that easy to explain, but I want to highlight the significance of where you were at on this chart. We can see this is these lows you made back in February, the lows you made back in March, the lows you made back in April, and then eventually you bounce, and then eventually you tank through. And then going back up, these are the highs you made in June, coming back down, you battled right here again before you made those highs back at 13.7. So we can see the area between 12.8 and 13,000, very significant. Can we agree? Okay. Good. So what we're going to do is go down into about the 15-minute and show you the intraday price action. I'm also going to go over exactly what Powell said. Looking at this is pretty much the three main things Powell said. And I'm also going to go over something in the speech, which I have a full dialogue of that as well. I'll have the link down below if you want to check that out and read it for yourself. It was a very short speech, but these were the three bullet points. Fed Powell. September rate action will depend on the totality of the incoming data. Now, this is where things get interesting, and I'm going to explain a little bit later in the video, but this wasn't really bad news. In all actuality, this was not. They're basically saying possibly going above that 4% level that we've talked about on rate hikes, which is what the Fed has established. And we're going to get into that here in a little bit, but it could be very bad. But we need to talk about this. But so far, that wasn't bad. They stuck with the 4% ceiling when it comes to rate hikes, which as of right now, that's a 5, 5, and 5, a 0.5, 0.5, and 0.5 going to the end of the year, which would inherently be good, quote unquote. Right? Not that hikes are good, but the market has been establishing those as good pulls, right? Anything lower than 0.75, the market's been bullish on, right? Okay, next, Powell, lower July inflation, welcome, but not enough to change the Fed view. Okay, so what have we established so far in the Fed based on what they have told us, right? Everything we do here is based on what the market is telling us and reacting based to the market, right? We are reactive traders. We do not jump the gun. We wait for the market to set its path and then we trade it. So what the market and what the Fed has been saying is, quote unquote, inflation is starting to peak. You know, these are the words of all Fed members except Powell. He has not really gone into that far yet, but I'm going to go into that a little bit later with Bostic and Bullard. But this is a good thing. I've already said too, if we did come out and the Fed was challenging and Powell said there's things we need to do, we're not there yet, that's good news for the market, to be honest, because the sooner we rip the Band-Aid off, the better. Number 3, at some point, the Fed will be able to slow pace of rate rises, which basically means stop raising the rates. Now, we're going to go into that a little bit further as well. These are very good bullet points. And again, as we look at them, I can see the negatives from them. However, they weren't really bad. And I'm going to go into exactly why, into what I see happening. But Powell did say, you can also see it's trending on Twitter, Powell warns of some pain ahead of the Fed fight against inflation. That's not new news, people. This is not new. Okay, so what I'm going to do is bring this up as well. And this is Powell's speech. And it's going to be really small, so I'm going to zoom in. Now, all I want to really go over is one sentence. And it's this one right here. Now, this is going to be hard to read. So again, you can read it, follow along for yourself. The link will be down below. Restoring price stability will likely require maintaining a restrictive policy stance for some time. And again, I want to say for the safety of the market and for the best overall outcome of the market, this is logical. And finally, they're saying logical things. I'm going to go into more in a little bit. So the historical record cautions strongly against prematurely loosening policy, which means bringing those rates back down, which we've seen people say maybe in the beginning of 2023, they'll lower the rates back down. That's ridiculous. That will not happen based on what's happening in Europe and how it's going to affect us. The committee participants' most recent individual projections from the June SEP showed a median federal funds rate running slightly below 4%, which is saying what the rate hikes are going to get to. Right now, they're at 2.5%. There's 3 more hikes to come before year's end. So again, 2.5 plus 0.5 plus 0.5 plus 0.5 equals 4. Simple math. You're welcome. By the end of 2023, participants will update their projections at the September meeting. That's it. This is important. And I'm going to highlight this specifically, and I can't highlight it right now because it's not a PDF, but that's what we're going to be talking about a lot here in the video. So how did the market react? And I was live going over this, and then I literally said, I was like, guys, I was wrong. We're not bullish, right? It is what it is. I literally cut my longs on live stream. You saw my positions down here when they got closed on the AMD, my only long position for tech. Right. Okay. So when you broke below 13, I was like, look, you're back in this chop zone. Want nothing to do with it. And then I told everyone, even on live stream, and I told you guys yesterday, to be bearish, you have to get below 12.8. And you did it. Okay? You did it. Congratulations. We're bearish. I am siding with this thesis. Until you get back above 12.8, you got to be a bear here. Why? And we have to go back to this. This has been the line in the sand, people. If they draw a line in the sand, you cross a line, you go to war, guess what? When you break below this line, you're bearish. The elevator steps in. Boom, boom, and boom. So there you are. You're bearish right now. I am sad that before I go any further, I want to give a special shout out to Hanka-Trade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using Hanka-Trade specifically is because, one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you a 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there are certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about. And boom. So there you are. You're bearish right now. I'm sad that I can't bring up Bookmap because my computer got restarted. We had a power outage here in Houston. It was raining super hard. So I can't bring that up because I don't have the data pulled up right now. I'll have to come back on Monday and show you some stuff going on there. So I can't do that. However, after that, I was like, look, you're bearish. It is what it is. You can't change the factors of the market. Going into ES, what happened here? Again, I want to highlight what was happening. ES futures, not ES the stock. You pinballed in a key area. We had that wedge mentioned. You broke out of it. We mentioned what needed to take place to be bullish on the ES. You got to get above 4,200. You tried, but guess what happened? You rejected. You came down and you broke that key support at 41.1, roughly to 4,100 flat. You broke below that. It was wraps. ES, you're looking bad. I'm going to tell you right now, you are in trouble. Key support ranges I'm watching right now, your next level down at 39.48 to 39.15. I believe that's going to be in the works, and it's most likely coming. You have another little support right here as well. I want to highlight that. You have some bit of range as well from 40.20 all the way to 40 or 39.95. So a small range there. Those are going to be your support levels. You're going to be coming down quick right now. Now, people were asking me right now, Tyler, are you swinging puts? I am not in any put positions yet. Personally, what I did, I had a game plan coming into today. What was my game plan? Everyone knows here. I was expecting coming into this, we got the data we wanted from PCE. We can go look at that if you want. PCE was good. GDP was good. However, Powell wasn't so good. Am I right? Powell didn't give us what we wanted. It's tough, but that's the way the market goes. And that's the importance of highlighting what happens when I lose and going over that. So hopefully that can make an impact on you. Today, what did I do? What were my trades? Let me talk about this a little bit. I want to show you what I traded today. So going into Discord, I'm going to pull it up really quick, bring it over here. All I did today on Discord, I'm going to be really transparent. All I did is I grabbed a few more natural gas limits. Besides that, I took my loss on AMD, which was a 28% loss. I want to mind you, 28%. Even despite the nasty dip we had, we took a 28% loss when we took 100% wins on 3M yesterday, 100% wins on USO natural or gasoline, the oil futures going on there, 100% gains on Target before that, more gains on CAP, huge winners across the board. What was my strategy here? To not lose the bag, people. So what happened? I had a clear stop loss when we broke below 13,000. After that happened, took the 28% loss. I'm still up on the week. I wasn't going to chase today. I wasn't going to flip the script, grab dated puts or anything like that. I'm going to wait for the market, step back to the plate come Monday morning and start trading like myself, right? What am I looking for? Exactly what I'm going to say right now. I'm looking for some type of a possible, it probably won't happen, I'm going to tell you right now, a possible retracement back to 12.8. Fingers crossed, maybe we get it, maybe we don't. If you get that test of 12.8, that's your shorting opportunity. Right now, am I grabbing knives? No. I'm going to explain exactly why. So I want to use Tesla as an example, and maybe this isn't the best example. So if we use Tesla as an example, you saw that, immediate downside with Nasdaq and the S&P. But what happened after that? Well, you come down to your 12.8 level, and this right here, we can go back and back test 945 into NQ. If we come back and look, 945, where you at right here. So this was your big level. This was your big push. This was, you get that volatility to right there, right to 12.8. Well, when we broke below 12.8, that's when we flipped to a bearish thesis, and they're just like, look, you're in the drain. Now you're looking for a retest to get into positions, right? In my opinion, Tesla didn't move that good. You got your steady downside, but if you're looking here, it was just chop all over the 90 EMA. Now, for example, if you held those contracts, you were getting killed by IV because the volatility was so crazy right here. Again, go look at the contracts, look at the movement, specifically on TOS. It's a very good example, right? Now, there were some decent trades. Like you had Microsoft. You had some good downtrenders, right? Beautiful downside. AMD went straight down. Again, that's what we got out right here. Stopped out, boom, 28% loss. We said we probably would have been down 100%. But guess what? We knew when to cut it off. These were some good trades. Your semis, those were the ones that were going to be really volatile on the day, right? However, I just didn't want to start knife grabbing here. And that's just me trying to protect my capital. But we got the exact movement that we would have looked for that downside. Because what did I say? You break 12.8, where are you looking for? 12.5 to 12.45, right in this range. Remember, I said it on my previous video as well. Go watch it. Go listen to it. I said if you break 12.8, where are you going? It's a straight shot down. However, in my opinion, equities just weren't dumping as hard compared to indexes. Just saying. Take it with a grain of salt. That's my opinion. People are saying, well, are you bullish going into, next week? I'm not. I'm really not. I'm not bullish. I just didn't want to overextend myself. If I have a plan going into the market, I am not going to flip the script every day. That's not what's going to happen. If I'm wrong on my plan, I take a step back and I don't trade. Why? Because this is the perfect example. Controlling your losses. This is how you become profitable, people. This isn't to highlight Discord or anything like that. It's to show you what I'm doing. So for example, people in Discord, they may be mad. They may be like, Tyler, where are my trades? I don't care. It's all about staying profitable, people. You're going to be wrong occasionally when it comes to the market. No matter what, the best of us are going to be wrong, okay? Your favorite trader, they may not say it, but they're going to be wrong. It's just a fact of the matter. It's preserving that capital. So again, what are we looking for on a Nasdaq going into this week? In my opinion, I think you're in pain. I think you're going to start seeing some downside. If you break below 12.45, you're looking, in my opinion, down 12.225 all the way down to 12,000 around 80. That's your next line of defense and support. So what am I looking for? I want to see a move back up, possibly to 12.8. Again, that's a very hope and prayer of hoping that's going to happen, right? And then getting that move back down to 12.2. Personally, that's what I want to look for. Also, the next big catalyst, I keep seeing people asking this. Again, it comes right back down to this statement right here. Restoring price stability when the participants will update their projections. So the question is, are they going to start updating it from a 4% by end of the year or higher based on the economy and based on how we've recovered so far? And I believe the downside possibility is if they flip the script and move that to higher. So they move it to 4.5, 5%, 6%, whatever it may be. I don't know. That's the question, because right now they've done 2.75 hikes and it hasn't really killed the market. You've actually seen uptrending from that. So now they may want to stick with those 0.75s as long as possible, as long as it's not killing the market. And then going into economic pain, things like that. We're going to cover more down the road, specifically going on to jobs, but I wanted to highlight everything going on today. Before I let you out here, I also want to cover SPY, going over the premiums and what's happening here with options. Again, you saw the bloodfest coming in. End of the day, huge orders on sweeps. These are sweeps. These are aggressive put options coming in at 386 and 390 for next week. So the bears are on the prowl. Qs, what's happening here? Similar. End of day, you're seeing Qs come in 2.2, a little bit less aggressive, but it's happening. It's more on the SPY side. SPX, more mixed, splits. So you're seeing them hedging or they're going heavily on the downside when it comes to SPY. Also, you want to look at VIX. Where's VIX doing right now? You popped above the 24 level. Again, this was looking good for the setup. However, we just didn't get it. That's on me. I'm going to keep at it. I'm going to give you everything you need going into this week. Now, as we look at VIX, I want to highlight a few things. We were getting rejected at that 24 level, then pushing down. Today, flip the script. You're going straight up. You broke through that key level. You were getting everything you wanted for the possibility of pushing. You just didn't get the news from the Fed. That's on me. I told you guys it was an aggressive play, and I was setting myself up for this aggressive play, and I loved the opportunity. I loved the reward and risk aspect of it. A 30% risk to make over 100%, I got to take that every day of the week. Looking at junk bonds, again, you started the day out great. You really did. You saw that rounding. You started to see a push up near the beginning of the day, and then again, you dumped. DXY, you're pumping again. You were dropping and then you pumped. It is what it is. Things were set up. Everything at the end of the day, it wasn't about the data. It was all about what Powell said. And that was the most unpredictable part of it. And the only thing that could have went wrong here. It's sad that it went wrong, but we had to step back to the plate. We got to find the plays. I'll have plays for you coming in Sunday. So make sure you're ready and make sure you have those alerts set. I'll see you on Sunday, traders.